It's time for another stock review. Over the course of this video, I'm going to go very deep dive into Carnival Cruise Lines. If you are one of my members, you can request a full review, and I will do this during a live event, and then I'll put it out as a video by itself. We're going to look at the inside trading, who's buying on the inside, who's selling, look at the balance sheet, the intrinsic value, go deep dive into the intrinsic value, look at all the numbers, the margins, the debt position, and so on and so forth, the news around the stock, what other people are saying, what my price targets are, some personal experience of Carnival Cruise Lines, looking at their website, looking at the back test, comparing to other stocks if you were going to invest. The purpose of it is helps you decide whether Carnival Cruise Lines is a good investment for you. And I've got a lot of experience, and I mean a lot of experience with this company. So I'm going to share all that information with you. We are going to start very light, very easy at the beginning of the video, and as we go throughout the video, it's going to get a lot more deep dive. People often say, why are you sharing such simple information? It's because they've not watched past the first minute of the video. It starts simple and gets deeper and deeper and deeper all the way down to the end of the video. So if you are a serious investor, you wouldn't be watching the first few seconds anyway, right? Okay, let's get straight into it. If it's your very first time here, consider subscribing to my channel, ring the bell. I do go live up to 10 hours a day. I'm not sponsored by anyone for anything that I don't use and have on a daily basis. Sensei Crypto supports my channel. I'm on his program. I'm supported by Alpha Spread. I use their software all the time for my investments. I will take no money from anyone to sponsor anything that I don't use, don't believe in, don't have every day of my life. And that's it. So this is the most honest, real channel on YouTube TV. I don't sell videos. I just share my opinions on my shares, and I've had great success. I consistently beat the market. I consistently beat Warren Buffett, and overall, I'm up from $5,000 to nearly 60 grand in 2.5 years. All happened in front of you live on the show. Right, let's get straight into Carnival Cruise Lines. Full disclosure, this is not financial advice. I'm not a financial advisor at all, and I don't own any Carnival Cruise Lines at all, and I won't be buying any Carnival Cruise Lines either, and I will tell you why shortly. There's my portfolio of CCL, and there is nothing in it, and there won't be anything in it. But just to balance that out, my wife likes it. Leah's got some CCL, but it's not for me. I won't buy it. All right, okay. Let's go into it. Let's start on a basic level and let's go down deeper and deeper as we go. So without further ado, let's get straight into Carnival Cruise Lines. And at the end of this video, I'm going to give you some links for software that I use that you can get for free as well. So I think it's quite obvious that Carnival Cruise Lines is a cruise company. Cruise ships operates through the following business segments: North America and Australia. You need to know, though, that CCL owns lots of other cruise lines that you might have heard of. Lots of cruise. There's the Carnival Cruises. If you go on a Carnival cruise, you think Carnival Cruise. It's a Carnival Cruise, right? However, CCL, Carnival Cruise Corporation, own other cruise lines in the CCL brand. So there's lots of other cruise ships you may have been on that aren't Carnival, actually owned by Carnival. All right, it's a very complex business. All right, anyway, we all know what Carnival is. All right, okay, let's carry on. We know, excuse me, the CEO, Josh Weinstein, it's not showing here how many employees there are. That's interesting. Miami, Florida. I've been to the head office in Florida. I've got a great deal of experience with this company, and I'll come on to that in a minute. Founded in 1972. It's regarded as low risk. Maintenance margin, if you were buying it, would be charged 25% maintenance requirement, which is the lowest there is. There's nothing lower than 25%, and it does go all the way up to, excuse me, it does go all the way up to 100%. So this is the lowest it goes. Market cap, 18.26 billion. Price per earnings ratio, negative 10.75. You're losing money, of course, the price to the earnings ratio. No dividend, it's just growth. All right, high today 1467, 52-week high 1955, 52-week low 753, and low today is 1432. All right, the average volume of this stock is 31 million, nothing huge, nothing insignificant either. Today's volume is 4.96, but we are only in the morning, but that does look low for today. Anyway, let's go. And I said, and I get criticized for this sometimes, but I like to make it simple at first and get more in depth as we go. This is simple stuff so far. We're about to get a lot deeper. Right. So this is Morningstar. Now, this was done on November the 3rd, so it's pretty up to date. They're saying it's a strong buy now, a strong buy. I've seen it really bad. Oh, hello there.
Hi, Martin. Can you do full review Aurora Innovation?
Yes, I can, Francisco. You are one of my members. I will now put you in first place after this one, just above Robbie Cooper, who bidded a dollar for his review. You'll now be next on the list. Okay, so we've got a 60% buy, hold at 30%, and only 8.7 selling. Now, what the bulls say, despite a temporary pause in Asia Pacific, a return to the market remains promising after COVID, as the four largest operators had capacity for nearly 4 million passengers in 2020. And the bears say new COVID-19 variants, the institution of no sale orders, geopolitical concerns, or border closures could pressure the profits. I have to say, having worked with Carnival, and I will cover that in a minute in great detail, the bears are completely wrong there. There's no issue with variants and surging of COVID-19 now. That's going to affect the cruise line company. So that's the bears are very weak right now, which is why the analysts are saying it's a strong buy. Geopolitical concerns. Well, Carnival Cruise Lines is mainly in the United States. It does own other cruise lines, like I explained before, but CCL's biggest component is Carnival itself, and they're all US based. So there's no issue with going around the Caribbean, Miami, California. And I know I've been on all of the Carnival ships, so I know what I'm talking about. So the bears really are clutching at some headlines where they've read it somewhere which doesn't actually apply. So I don't agree with the bears. The bulls, however, they're talking about rising, going back to the original, back in 2020. Those days are gone. So for those of you that think, oh, great, the share price went down and nobody was sailing, it's going to go up now, it's bound to go up. That's why my wife bought it. I said, no, the industry is changing, this type of cruise ships are changing, the customer is changing, and just because nobody was sailing for a while and Carnival went down to nothing and now it's going back up again, doesn't mean to say it will go back up again. It lost a lot of money during that time. I know, I've worked for them, and it cost millions to have billions actually, to keep all the ships in dry dock, minimum staff. They lost a lot of money. The share price was devalued and devalued and devalued, and it may never return. It was so badly damaged. Now, not only do I say it may never return, I don't care how many people think they're going to go back on Carnival. The style of cruise line industry has changed. The style of cruise ship has changed. Carnival has a terrible record when it comes to the environment, and we know people don't want to be cruising on environment disaster policies, cruise lines. And before anyone says Carnival is always telling you how wonderful it is and how much I have worked there. I know the fleet captain. No one knows more about Carnival as an investment than me. I've worked on every single one, and let me tell you, the fleet captain and the office. I've been the office. All of this stuff. Carnival Cruise Lines is a very dirty company, right? It's got a lot of connections in Cuba. It's a dirty company behind the scenes. The way it treats its staff is terrible. They will tell you it's great, all the guys from the Philippines, because they come from a country where they get paid nothing. So when they work for Carnival, they think it's great, but actually they're being paid peanuts. They're being abused, but they think it's great, okay? Carnival is a terrible company, and its environmental issue, they just beat the target they are presented from the environmental office, and the target is so low and the amount they beat it by is so pathetic. They just do what they need to do, but they are trashing the oceans. And there's a good reason why I say that, because the competition is going to crush Carnival. Right, I will come on to that in a minute. So anyway, that's just a little bit of my view, and I will show you some pictures of me actually working at Carnival in a minute. I've been all over Carnival, every ship and the office. Okay, so uncertainty, it's very, very high. It's poor. Look, stewardship, the CEO, poor. Management of the company is rubbish. Those that know, I do not buy any company where the stewardship is poor. Fair, good is whatever, but poor, no. Economic moat, none whatsoever. No protection to this company going bust, zero, okay? And anyway, as we can see, things have improved recently. No surprise, they've stopped being in dry dock. More people are cruising with them and they're making money. I mean, of course they're going to go up, but do you think it's going to go to where it used to be? Not a chance in hell, and we'll come on to that in a minute. Anyway, let's go deeper now into the stock. This was just the basic level of my opinion and so on and so forth. I'm not sponsored by them. I don't care whether they go up, down, left or sideways. I'm just telling my members the facts, okay? Let me show you the website. Very, very important. They present themselves quite well. They are regarded as the fun ships, not quite the fun ships as they used to be 20, 30 years ago. There were incidents with crew members. Nothing to do with me. Wasn't there 20 years ago. Crew members having fun with the passengers, doing all kinds of things. A few people took it too far, and now it all shut down. It's not the fun ships anymore. You can't just do what you like on Carnival. There are rules now. There were some incidences of different things that happened over the years, and now you cannot socialise with the guests in this way. So the cruise line has changed dramatically over the last 20, 30, 50 years. You will see on their website, they are presented as a very fun McDonald's type of company, which they are. They are a McDonald's style company, cheap and cheerful, but they're getting cheaper and cheaper and cheaper. Their margins have been cut. Their profits have been cut. As you can see, they're always on sale, always giving it away. Quality companies never offer discounts like this. They're always offering discounts. And the reason for it is they make most of their money, not on the cruise line, but you in the casino. I told you I knew a great deal of this company from top to bottom. No, I don't think anyone investing knows as much about Carnival as I do firsthand, quite honestly. They don't make money on the cruise line, the cruise itself. They make money on you gambling in the casino. So you've got to have money to spend. People haven't got money to spend. They go on Carnival because they get the cheap away from home, cheap holiday, cheap the alcohol. The food's all free, the drinks are all free. The alcohol you can buy in buckets, like a package deal. So you can get a very cheap getting drunk holiday. If you're not spending in the casino, though, Carnival don't make any money. So you need to understand that the workings of Carnival. So for me, the website is what the website is. It's not a great website. I always like to talk about the website because it's a presentation to the customer, but also it's information for the shareholder. It's a very, very basic website. I'll give it no more than 4 out of 10. Which is one of my lowest scores. It doesn't use innovation in any way. It doesn't capture new audiences. It's very much back in the 80s, hasn't really changed. And it doesn't present itself very well, in my opinion, to the investor. All right, let's now go, talking of the investor, into the investment side of it. We're going to get a bit deeper now into the stock. All right, let me just clear that screen there a minute. And if you want to do any comments during the making of this video as a super chat or as a crypto giving, it will give it on the screen and I'll read it. It will read it out automatically, so you can be part of this Carnival review. Now then, just to give some color, I did say to you that I've worked extensively on Carnival. There's me on one of the cruise ships. Look, got my little pass there. I'm just having a little beer on the beach. That's in Mexico somewhere. I'm not sure which ship that was, but I've worked on every one of them, and not just Carnival, all the others in there under their umbrella. I've done nearly all the cruise lines of the world, the P&O, the Caribbean, Holland America, Disney, Athenia, Viking, you name it. The QE2, that's not part of Carnival, but I've done nearly all of them, and every one of the Carnival ships itself. So I think there's about 35 ships. Anyway, let's get back into the trade. So there's just some color there just to show you what I was doing there. Right, now then, what we're going to look at now is the value of the company. This is very, very important, right? We're going to start off with the valuation. Best case scenario. We're not in a best case scenario because the sort of people that go on Carnival, it's a McDonald's cruise line. It's not where the money is. It's a cheap budget line. But Carnival is predominantly the main part of CCL. That's why I'm focusing on Carnival. If you've got no money, like I said, to spend in the casino, Carnival don't make any money. They don't make any money from the cruise ships itself. The actual holidays themselves. Best case scenario, 66%. Well, if this was a good valuation, we should be at 120% best case, and we're certainly not, specifically because of this clientele who don't have much money to spend in the casino right now, and that's getting squeezed, and we know interest rates are going to come down, but not for another 6 to 12, not until the spring, the summer. But pressure will be there for the consumer with inflation for another year or two. They haven't got the money to spend in the casino. So that's very, very underrated, and that's only 66%. Base case, 41% over undervaluation. Again, not enough for such a high-risk stock. I think we're more in the worst case, 29%. However, looks good, right? On paper, you think, well, the intrinsic value looks quite good. You have to remember that you can have a valuation trap. This is not indicating one through our algorithmic software. I like that word, right? Very advanced way we present this information and build it all out. However, you need to look at other things like I'm explaining about the fundamentals of the business, the reality on the ground, so on and so forth. It looks cheap and people are buying it. It isn't cheap though. And that's why this whole review is important. Okay. Wall Street give it 18% target there. Relative value 59. DCF is down 59%. Intrinsic value 29%. Now you've got to remember you could, without the risk, just buy the S&P. We'll cover that in a minute. Anyway, historical profit 50%, but we can see how over time that profit has dramatically come down. And now we've had to devalue and dilute the stock, lose money. Now we've got to make money out of the returning customer who hasn't got any money to spend in your casino, which is where they make their money. They don't make their money on the holidays. Okay. So historical value isn't going to go forward into the future. This is just experience, right? Now then, fundamental analysis is important, right? We can see here how it dropped off. This is no surprise. Dry dock, that's when the ship was kept in dock, not at sea, not making any money, but costing money. Operating income, down the toilet. During that same period, no surprise, things have started to recover, 20 billion back in August. Now analysts are giving it a prediction, but if you think about it for a minute, people haven't cruised with Carnival for a long time. This curve should be accelerating because people haven't been spending money on holidays, on cruise lines all this period. And yet it's flat. It's rising very slowly. And that's not taken into consideration because analysts can't value this like I can. They're not spending in the casino. So why would we even get this? I don't think we will. I think it will go flat. Well, flat's no good for an investor. Great, have a great time. Go on a cruise ship, go to Mexico, run around Cozumel, have some fun. Great, nothing wrong with a holiday, but as an investor, it's not one for me. Net income, we can see it's dropped and it's improved over the last period at 53%, but it's up 53% from negative. So it's up a lot, but it was down a lot. So it's not that up at all, really, if you compare to the previous periods. We are not exactly doing great, right? Anyway. Operating cash flow, again, look, up 205%. Don't get dragged into that. It's still way below where we were before, and we have not had a curve upwards. We're still down, and we're going to stay down. Capital expenditure. Now, you can see here what I just explained. Capital expenditure dramatically dropped, came down because they are keeping the ships in dry dock, spending money. But, and very important, with the amount of money they're spending, all they're doing is paying for losses. They're not actually going to the next generation of cruise ships. And what I mean by that is there are companies now building solar powered cruise ships. Carnival is still a diesel ship. All right. It will tell you it's cutting back on the environment impact. It does it by the very minimum, just enough to allow them to say we're doing something, but actually they're doing very little. So and I know I've been there. I said, why don't you change all these bulbs to LED? That would cost too much money. We only need to achieve this. Because I'm in the environmental department, right? I'm like, well, we could do better than this. Well, as long as we hit this level, we get the tick, we carry on cruising, making money. We'll go, that's disgusting. We could do far better than this. No, we only do what we need to do. Rubbish. Well, other companies are coming along going, we can make this entire ship solar. We can do this, we can do this, we can do this. And they're investing on the future of cruise tourism. Carnival ain't. And they can't afford to, even if they wanted to. So that's really, really bad, right? Cash flow. Again, you look at the cash flow, it's just gone to nothing. However, it's up 77%. So the headline news, people that want to talk about it on Bloomberg and CNBC and all the rest of it, oh, buy it. It's up 77%. It's up 77% from minus nothing, right? If you can compare it to what it was before, it's still rubbish. So you can see nothing there. Right. Now then, do you need any more convincing? You might have got the idea that I don't think it's a good buy. I think it's the worst thing you could possibly buy. Right, assets, 49 billion. That's all the ships and all that stuff. Great. Remember though, those assets, the biggest part of the assets for the company is its ships. The ships depreciate in value. And when we replace them with more modern ships and more environmentally fit ships from other companies, just like your gas car is going to be worth nothing in 30 years time because everybody won't want it. They'll have an EV. Right? 49%. A lot of assets there. Cruise ships depreciating and will eventually fall off over a cliff. Their liabilities, 42 billion, just behind it. So their liabilities are just behind their assets. And the assets could drop like a stone. So do you want to own a company where your balance sheet is virtually parity, the same, you know, that your debts your liabilities equal your assets? That not that far off. And considering your assets can depreciate quickly over time, I don't think that's an investment for me. Anyway, if we look at the liabilities as well, what we will see, this is what's really painful for Carnival. Long-term debt, not short-term. Long-term debt, $29 billion at an interest rate that is going to stay high for another 6 to 12 months. Even if it pivoted, it's only going to come down by 0.25%. It's going to stay high for a long, long, long time. And people aren't spending in your casinos. I can't see how the company can survive, let alone be a good investment. Anyway, looking at the gross margins, 47%. You see how it fell off a cliff. Minus 200, that's what happened. Now it's coming back, but the margins are still lower than what they were. 40%, 41, a couple of times 30%. Yeah, we've had a couple of, we've had a couple equal and a couple beat. So margins have improved slightly, but I don't see, and are they predictions? No, they're not. No, they're not. Margins have improved slightly. I don't see that continuing though. So anyway, operating margin, net margin, you can see it on the screen for yourself. All right, now then, Exactly what I just said. Before I even looked. I'm doing this live. I'm giving you my opinion, and I didn't even look down at this. Profitability, 28. You cannot be buying a company which is as low as 28 unless it's got some huge upside, huge potential, because it's investing in itself. It's not investing in itself. It's investing to stay alive. So 28% profitability score is rubbish. Rubbish. However, the lowest ever I have ever seen of all the reviews I've done, I don't think anyone has seen a review lower than 14%. 14% solvency score. That is the lowest I've seen. I think that was lower, if I'm correct, than FFIE, which ain't selling anything, right? I just bought that as a moon bag. I think it was better than that, which is 90% going bankrupt. This is even lower, 14%. You cannot make a sound investment on a company with a 14% solvency score. In other words, 86% likely it's going to go bust. Well, I don't know how you want to value your investments, but I would regard that as a bad idea. Anyway, Wall Street's targets. At the best case scenario, which we know is not likely, 81%. For such a high growth potential from such a low level, we'd be expecting way more, 100, 200%. On average, and we're not average, we're only 4% better than the S&P with no risk in the dividend. There's no dividend here. What's the point of that? None. Lowest forecast, you're going to lose 51% of your money. That's more likely. So from a Wall Street standpoint, and they've not worked at the company, they don't know what I know, they're not giving it a good rating, so I'm damn sure that I'm not going to. Anyway, competition is not relevant. They do stand on their own. Now then, this is interesting. In the last 3 months, in fact, October the 19th, just a couple of weeks ago, Weisberger Randall, the director, bought 1.2 million shares of CCL. Now, before we all get excited and jump up and down and go, that's good news, this company has a very dark history. It's got offices in Cuba. It does some very shady things. I have to choose my words carefully. It's not everything it seems to be. It's not all good. This I would regard as manipulation. It's real. It's happened. The director has spent 1.2 million. It's nothing at all to move the stock price. It's nothing in percentage terms of the company itself. It's not a big story, but it looks nice. And it makes the sort of people that cruise line, it's a low budget customer, want to buy the shares, because most of the people that I cruised with, that I worked with, like to buy shares in the company they cruise with. They like it. The diamond customers, the platinum customers, they feel rich if they walk around, they get extra benefits. I'm a shareholder. There's that real ego thing. If they had a real ego and a real pride, they'd be on the QE2. They'd be on Crystal Cruise Lines. They're not. They not really got that sort of money, but they want to think they've got that sort of money, right? So they like to walk around telling everybody, I'm a shareholder. So the director knows that. He knows that his diamond customers, platinum customers, and all those people love to own shares in the company. They all do it because they get discounts in the casino. That very fact should tell you what sort of company this is. The people that are shareholders get discounts and benefits in the casino. Do I need to say any more? I mean, I'm in a very privileged position. I know a lot about Carnival, right? So that to me is more of a headline to get people to go, the director's buying shares in the company. He's actually bought a handful of shares at 1.2 million. Makes no difference, but it does grab attention. And I wouldn't be surprised if they promote that to get everyone to think Carnival is in a great state. It isn't. It isn't. That is not an encouraging sign. It looks like it is. but it isn't. The stock market is very manipulated. Wall Street's very manipulated. You need to understand the whole of this stuff. Right, let's have a quick listen in to this.
Carnival CEO Josh Weinstein. Josh, good to see you again. Thanks for making time for Yahoo Finance. And to me, I have to be upfront with you. This is a head-scratching market reaction. Why do you think the stock is selling off in what appeared to be a pretty darn a good quarter and pretty darn good outlook?
Get ready for the CEO. Get ready for, and I've not watched it yet, but get ready for the pitch, the sales pitch. All right, not the numbers, the sales pitch. I'm predicting before I watch it, that's what we're going to see.
Well, our job is to deliver what we say and ideally out-deliver. And that's exactly what we did in our third quarter. We out-delivered on revenue, on the booking trends, on the onboard spend. So really, I couldn't be prouder of the team for what they...
Onboard spend, you see that mentioned there, the onboard spend. That's where their margins have gone up more than I actually anticipated, actually. So I'll give them that. That was a good tick. They said they've improved on margin spends. But to say they've gone up, well, of course they're going to go up. It was nothing before. We've got to get back to where it was, and that's not what I see. That I can't see that'll ever happen. Hence why it's not a good value, not a good time to buy it. Not a good company to buy ever now, I don't think.
They've accomplished, and we carried that forward, and we upped our guidance for the full year, and we said we expect our per diem trends to continue as we continue to just close that occupancy gap back pretty much entirely to historical levels. As a result, we took up our yield guidance for the fourth quarter, and the momentum is great. So, all I can tell you is we'll keep trying to just deliver on or out deliver, and hopefully the stock will match up with that.
Is there something near term that's giving you pause?
Well, from my perspective, as far as how we're running the business, really not much. On the demand side, all we see are green arrows going up. We've got record booking levels. We're 10 points better booked today than we were a year ago, looking out for the next fiscal year. On top of that, we're booked at higher prices. And so we've got some stickiness as we look at.
That is not accurate. If you look at that record prices, that is not accurate. He's talking about the prices advertised, but actually people pay. This is why you need to do all this research. I know that the prices are higher, but the discounts are greater. So what people are paying is less than it was before to entice them back. It's not, just because we're selling at higher prices. Well, you're not selling at higher prices. You're advertising at higher prices. There's a very different thing.
Out over the next 12 months, the onboard spend levels haven't slowed down. So the absolute amount that our folks are paying when they're on board for experiences, be that F&B, shore excursions, casino, communications, you name it, that hasn't slowed down. And one of the most encouraging things is, a year ago, we were talking about a bit of a dichotomy between the pace of the recovery for North America versus Europe. Well, I'm really proud to say that our European brands, AIDA, Costa, they outperformed too. And they just came off of a third quarter where their yields were higher than 2019. And they're driving a lot of that booking outperformance as we look forward. So as far as I'm concerned, from that perspective, everything that we're trying to achieve, we are hitting the mark and then some. Well, remains to be seen.
Josh, I thoroughly read your earnings release. I led to, of course, listen to the earnings call. And your report, booking strong, occupancy strong at higher prices. You're calling out good things for the next 12 months in terms of forward bookings. Square that up with what we're seeing from the U.S. consumer. We're seeing credit card delinquencies rise. We're seeing auto sales slow, but yet consumers are getting onto a cruise ship. How do you explain that?
Yeah. There's a lot of woolly information here. Yeah. I'll be interested to see what his reaction is to this.
Well, I think you got to start on the premise that cruising is inherently an unprecedented value compared to land-based alternatives. We quantify it anywhere from 25 to 50%. So ideally, we want to outperform in any environment.
That is true. It's a cheaper way to holiday on a cruise ship. That is true.
Environment. And in an environment where maybe the macroeconomic trends are getting a little worse. Candidly, we've heard about a recession for the last 18 months, and I'm sure it will come. but let's say it is coming. You've got an experience that cruising can provide, and the relative value, making your vacation dollar go further, plays very well into cruising. And so maybe
that is true, but like he said, things are likely to get worse for the consumer, and they make their money primarily from those casinos, not the price of the cruises. I don't see it with the credit card delinquencies and rising and all the rest of it. I don't see the customers spending as much money as you're kind of advocating to it going forward. I really, really don't.
There's just a combination of the fact that we offer a great product. And people are really starting to see the value. We're really trying to push on that messaging so people who have never cruised before can really understand that and come sail with us. And I think that's working. As a matter of fact, if you look at our trajectory of our guests carried, our loyal guest base is pretty much been consistent in absolute numbers when you look back from the fourth quarter of last year all the way through the third quarter. A huge amount of growth, and it's all been really pushed forward by first-time cruisers and new to brand. So the message is getting out.
Do you get worried that if we do get this government shutdown, your business in large part is all about confidence? I have confidence that I'm going to have a job a year from now.
We're not going to get a government shutdown. That's not going to happen. And I don't see how that would affect Carnival anyway.
Now I'm going to put a deposit down on a cruise vacation. There is confidence in the financial markets. You're a company that is cutting debt, but still has a lot of debt on the books. What would a government shutdown mean to a business like yours?
That's a great question, and I wish I had an answer for you. We've been through government shutdowns before, and we've been through recessions before. And the good thing is we are a resilient business because of that value play, because of the advanced nature of our bookings, where we have a pretty good amount of visibility as opposed to lots of other industries. And again, holidays, vacations, they're sacred to a lot of people. And so they will move heaven and earth to figure out how to make ends meet in order to protect the sanctity of the vacation.
He's right there. The people that go on Carnival Cruise Lines are extremely loyal to Carnival. It's like McDonald's, as I say. It's the McDonald's, not all the ships, because they like they said, they have other brands in Europe and so on and so forth, but predominantly is the Carnival ships. They are like McDonald's. People always shop at McDonald's, always buy a can of Coke. It is like that, and they're not going to ditch it anytime soon. That's true.
Vacation, and we appreciate that tremendously. We understand how big of a responsibility that gives us to make sure we deliver, and the NPS scores are great. The satisfaction scores are great. So we think we're really clicking on all cylinders.
I need to give you some props, Josh. I talked to you at Milken, and you really made it a key point to point out, Brian, we're cutting debt, and we're going to cut it aggressively. And you have. Where do you want to be in terms of debt for Carnival looking out over the next year?
Well, I'll tell you, we've come off of our peak of a bit over about 35.5 billion. We're already down over 10%, and I'm real proud of that trajectory. I'd say as we look over the next 3 years, we've set out targets that get us through 2026. And what we've said is very clearly, we expect to hit investment grade credit metrics by the time we're done with 2026. And so that would imply that we've got another 10 billion to go, and we expect to be able to accomplish that over the course of the next 3 years. I would say next year is, relatively speaking, when we have the most growth in capacity. We've got 3 ships coming next year. So that'll be a year that won't necessarily be as big of a driver of debt reduction. But after that, with 1 ship in 2025 and 0 ships coming in 2026, that gives us a tremendous amount of headroom to kick off billions of free cash flow to directly go to pay down debt, because getting our balance sheet back to a
that is critical to the company. There's no doubt about it. I struggle to see how they could get there that quick, but that would be good if they did that. No question about it.
Place is very much a primary focus.
Good to see that narrative continuing. All right, so your bookings are good. You seem like you're ready to withstand if a government shutdown of any kind. Now, what about oil prices? We have seen oil prices tick up to about $100 a barrel. How much of a headwind is higher fuel to your business right now?
Yeah, no doubt.
As we know right now, I mean, this was a month ago, oil is coming down, so this will benefit them. As I said, they are a diesel ship. They're not solar. They're not like anything like the future of ships. What other companies are starting to bring online, but they are subject to oil prices. It's good to see oil price coming down for them. That will help.
No doubt that hurts, and it covers up actually a lot of the good things that we talked about, I think, on our earnings call today. We outperformed in the third quarter, for example, and we actually raised our guidance, our EPS guidance for the full year. It's about $200 million worth of good things that we're doing on the revenue side, on the fuel consumption side, which I'll come back to. But unfortunately, the change in fuel prices and the dramatic nature of this spike has basically taken $125 million or so away from us. Now, the one thing that we are maniacal about is you can't really control the price of fuel, right? But what you can control is how much you use.
Yeah.
And no matter what the environment is, no matter what type of fuel we put into our ships, if we use less, we save money. And so we actually are going to be outperforming what was a pretty audacious goal of a 15% fuel usage reduction versus 2019 and carbon intensity. We're going to hit 16% this year. So 16% reduction in unit consumption.
Do you remember what I said at the beginning of the video? Carnival are always doing this. They get set targets and they beat it by 1%. That I just showed you, 15%. We're going to beat it by 16% this year. They get these targets from the environment and so on and so forth. There's all sorts of things they've got to do with dumping the waste in the sea, how much fuel they use, yada, 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 all these things. And they always beat it by the smallest amount. And when you discuss the environmental issues with people on the ships, they can go, yes, we could do way better than this, but we just do enough to keep our license and our ticks in the box. They're not about the environment, and there are companies coming that will absolutely wipe the floor with Carnival, and I hope they do so as well, because the environmental impact of Carnival on the oceans is terrible. There's a whole island of rubbish, flat plastic, floating in the Gulf right at the moment, and it's really terrible and mainly caused by Carnival, and they won't mention that on this interview.
Consumption that translates to a $375 million savings in 2023 as a result of that activity.
So there we go, a little bit of information there. I hope that was of use to you. We got a bit more to do yet. We haven't quite finished our review. This is a full review. We're now going to look at sentiment. In the last, have we got any news there? When did this come out? Let me just check. No, that's old news. We don't need that. What about the sentiment? Now, this is important of the investor. Over the last 90 days, we had 53% positive, 22% negative, 30 days, 35% negative. That'll be in the range of the oil prices going up. Last 7 days, gone down to 27, and today, 25. So there's still lots of negativity, but there's some positivity around the stock as well. So let's move on. And I want to share with you the short interest. There we go. Percentage of shares shorted. 13.52. 20 is excessive, and that's when you start talking about short squeezes, but it doesn't mean to say at 20 you get a short squeeze. GameStop went to 100% as we started to short squeeze. So we're at 20 with Virgin Galactic 22 to give you an indication. This is 13.52. It does have a lot of short interest, not excessive. Doesn't mean we're going to get a short squeeze, but when you compare it to profitable companies like Apple or Amazon, they're down at less than 1%, or Google and things like that. So we are high, elevated, but not excessive. It just shows you there's a lot of people, a lot of investors, if you call shorters investors, a lot of people regarding that it's worth a good bet of it going down. We don't need a short squeeze. We just put pressure on the stock going down. So 13% is still very high. A lot of people are betting on it going down. I never short stock. I never I don't believe in it. I think it's wrong. But I appreciate that you do it because it allows me to make money from you anyway at some point. But shorting is part of the game. It does have a lot of short interest. So there we go. We've got one final thing to do, and it's very, very important. It's called the back test. I've run it through my software and given you some very important information. Here it comes. This is the back test. If you're going to invest in Carnival, you've got to know if you put 10 grand in the S&P since 2011, which is as far back as we can go, 10 grand in the S&P, how much money would you have? Well, you'd have 4x in S&P, you'd have 42 grand. But Carnival, you'd be down at 3,298. You can see there, Carnival is the blue line, and the S&P is the red line. Now, it's quite obvious to see the impact of COVID over Carnival. No surprise there, but the trajectory, if you look at it, was already. This is what everyone doesn't want to talk about. This is the most important thing I've said so far. Is from 2018. We were already going down compared to the S&P. COVID wasn't happening here. This isn't COVID. This is boom time. Everything's great. No, not good. The cruise line in its current shape is declining, despite what the CEO has to say. Then it fell off a cliff. Then it kind of kept going down as the S&P kept recovering. So there you can see quite clearly, why would you buy Carnival Cruise Lines when the debt is massive, when the interest rates are going to be held up, when the customer is not spending in the casino the way the CEO wants to present it, when the environmental issues are hardly being, they're just beating it by the smallest amount. So other more environmentally companies, solar cruise lines and so on and so forth are going to come on and wipe the floor with it. Certain things he said was positive and correct, but overall, I don't give this a buy. Overall, I would say no, it's not a buy for me. I think I've demonstrated why I think that on many, many levels. The debt situation, the customer, the competition, where interest rates are going to hold for another year, customers not spending the same way. People want a different style of cruise now. They were already failing in 2018. They don't talk about that. They massively diluted the stock. So even if things do improve, they're not going to improve anywhere near to get back to the price that it once was. If you're buying it because you're buying it at $14 and you think, I can make 15, 16, 17, 18, I don't know. I don't even see that. But maybe you do, then fine. But if you are, even I don't see that though. I actually see it going further down. However, if you are looking at Carnival thinking, hang on a minute, I can see it going back to where it was. I can see it going up to $69. I think you are very, very, very much mistaken. I wish you the very, very best, but it's not one for me. There's my full review today on Carnival Cruise Lines. I hope you enjoyed that. Click above my head for all the links. If you like my software that I use, my members get a lifetime discount. You can get a free plan or you can get a 10% discount, which makes my membership free. Everybody else, I've got a referral for you as well. You can go up there and get a free plan and some discounts as well. Go and check that out. Look in the description for more links, more reviews, and my newsletter above my head and down. It's basically up there and down there. I don't know. I just do that. Hang on. There you go. I just do that. It's in the description and above my head. You can find all the links to everything you need, my newsletter, my X account, and all the rest of it. And if you want a full review, you can have a full review, and I will do one for you as well. All right, there we go. Over here, I'll put more videos that you might find interesting. I do reviews on every single stock my members ask. So there's a full playlist here of millions of reviews. There's about 12. All right. And then millions sounds better. Sound like I work for Carnival. And go down here and you'll see more interesting information. All right. That's it from me. That review was done for Jason Fallon in Australia. Thank you very much indeed. As always, take care of yourselves and each other.